afternoon, everyone. Thank you for joining us once again here at Seafried and Brew for our economic briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we want to review over the employment situation report from last week real quick and give a highlight for what we're going to look at next week. Overall, when we look at the situation report, we find that fairly significant reduction in the number of jobs added between April and May. If we go to those types of jobs that are created, we can see of the 75,000 jobs created, we had 90 in terms of that private, non-government, and government actually came down by 15,000 jobs. So you saw that pullback in that government jobs, which resulted in that ultra low 75 total non-farm jobs. But overall, a couple more surprising items here. We continue to see the retail number being negative, down 7.6 thousand jobs for May. And then also that transportation and warehousing down just below 1,000 jobs. So we see this continued erosion of what tends to support our overall economic stance here, our GDP, that trade, that retail, and that warehousing. So we see those two items pulling off. However, we do continue to see this very strong number in the healthcare and social assistance up 24,000 jobs. So we continue to see that being fairly positive, and the professional and business services up 33,000. So overall, when we look at the types of jobs created, we see that we have a pullback in that retail sector, including warehousing. We continue to see that strong healthcare and social assistance services increasing. So something to keep an eye on as we move forward in here. If we continue to see the retail, that could be an indication of a pullback into consumer spending, which is what we've seen so far. So we want to keep an eye on those numbers. However, when we look at the overall level of the hourly wages, we can see that picked up. Again, we're up above 3% at 3.1 year over year, down from where we were the prior month at 3.2. In fact, that 3.2 was also the expectation for May. So when we look at 3.1, just under that expectation, and we look at going back into history, we can see more recently topping out and then having this downward momentum over the past couple of months when we're looking at that year-over-year change in hourly earnings. So we'll see how that's going to impact the Fed, if that's going to push them into that territory of potentially lowering rates in June. Most likely not. I think this is will have to come down a little more for the Fed to jump on that. We do have this week, though, we do have the inflation numbers coming out, both PPI and CPI, so it'll be interesting to see how they come out. They continue to show inflation that's subdued. But next week, the Fed does meet, and we will be reporting on that later in the week in terms of their statement and any actions that they have taken. But we've seen the impact to the market so far, that 10-year down very close to that 2% mark. It has yet to breach it, but we are getting close to there. We're up a little bit on Monday, back up into the 215 range on that 10-year Treasury. So it'll be interesting to see how we move through the next week, and in terms of what the Fed will be doing with interest rates. Most likely, unless something really goes awry this week and some of the numbers that are coming out, most likely we're just going to stay where we are at least until July July would be the earliest, I would say, that the Fed would react and start reducing that Fed funds rate. But that might even be a stretch. We will see what the numbers coming out over the next week is going to give us that indication. That's what we have for you today. We look forward to seeing you again on a later date. Have a great day, everyone.